Hi everybody, this is Osprey from mychartcoach.com. Thanks for taking the time to view this video here. We're taking a look at, first up here is Bitcoin. As you can see here, Bitcoin pulled back ever since that the Winklevoss ETF got denied. This really strong uptrend. You can see the candles are riding the pink line higher, EMA4 support. And then here on the 31st of July, a bearish change in trend started. Notice how the candles closed below EMA's 4 and 8, the pink and green lines, and then the candles have been riding EMA 4 resistance lower ever since. And so there will not be a reversal until it closes above EMA 4, currently at 68.10, and it has to turn that level into support. The bearish move was the drop today below the green line here, which is the 50-day simple moving average, currently at 6928. It was flirting with that level all day today. Basically, it's been testing that level for the last 4 days. It looked like it was going to try to close above it, and then at end of the close there was some selling pressures. You can see there was a volume spike here. You know, the volume has picked up and it's been to the downside. You can see there was what we call a climax spike here on the 24th of July. That was with this big candle here. That's when everybody took profits, and then you have the downtrend followed. And so what's going on now is you've got a break below this key resistance level or key support level. Notice how this green line here was resistance, and so it was 67.54. That 67.50 level needed to hold. It also dropped below that level, today as well. Now a new candle is forming. Now the next candle is forming, and it's pushing lower. And so staying below 67.50 is signaling more downside risk. Okay, so if it fails to bounce off this 6600 level, what you could possibly see is a drop down here to around 62.63. The bottom of this red candle here is at 63. So the 62 to 63 level is going to be really big. And if that were to break, you're talking about a retest of 58. It's not looking good right now. I mean, it really needed to stay above that 50-day simple moving average. I mean, really, it needed to stay above the 100-day simple moving average. And so right now, the bears are clearly in control. It's just it has to break EMA4. That's all I can say. I mean, as long as EMA4 is a resistance, Bitcoin is a risk to hold long. I mean, watch out. If 6600 breaks, then you're looking at 62.63, and then a possibly retest of 58. Okay, let's look at Litecoin. So Litecoin is under big pressure as well. Look at this downtrending channel. Ever since it peaked here on the what was that date here? Over here back in December the 18th or so. I think that is the 18th. It's kind of jumping around there. But it peaked here on the 18th or 19th of December. It had the high close on the 18th. It hit the high on the 19th, and then it came down, and it's been in this downward channel ever since. Notice how this red line here is the top of the channel, and so that is currently up here, around 125 or so, and then right now it's at the bottom of the channel. You could see the descending support line, and so it's going to be really important that it comes down here and bounces off of 65. Notice that was also a top back here. Once it broke above this closing price here on the 13th of October, on this green candle right here, that's when it really took off higher. And so this is a major support level for Litecoin. It needs to hold 65. If 65 breaks, you could see a possible test of 53 and a possible test of 45. It would be really bearish if it failed to hold this descending support line. This is where it should have a technical bounce. If it doesn't bounce off this level, it's going to be a major red flag. Notice it hit that 50-day simple moving average and it failed to break. That did signal downside risk. Once again, you have candles, riding below EMA4 here, this pink line. If that level fails to break, that's going to signal more downside risk. It's a risk to be long. Okay, so take a look at XRP here. This is Ripple. Ripple had the big pullback here, and as you can see, it dropped down multiple red candles in a row. It's down here testing this support level from this closing price here. You can see this. It's hard to see the candle, but there's a candle right here, right down here on the 12th of December, and so this is going to be the big level to hold. If it fails to hold this December 12th level down here at 34 cents, that's where you could see it come down here, possibly test 28. Okay, so that's the top of these two candles right here at 28 cents. That's going to be a really big support level, and then below that is 21. 21 is lining up with the descending resistance line or support line and this downward channel. Right now it's in the middle of the channel. The top of the channel is up here around 65. You can see descending resistance, and the bottom of the channel is down here at 21. Right now it's in the middle. So if it drops all the way down to the bottom like it did these two times, then 21, could potentially be tested. Look for a technical bounce off at 34. That's the top of this candle here. If 34 doesn't hold, there's really no support until 28. Okay, let's get into some stocks now. All right, so let's look at Tesla. Tesla had a huge day today. With the whole first coming out and saying that the Saudi kingdom had taken a $2 billion stake in the company. Then coming out several minutes later and saying that Elon Musk tweeted that they were thinking about going private for $420 a share, which everybody found very amusing, being the number 420, right? I'm sure he's laughing every time they say 420. But the bottom line is Tesla broke out. Okay, so it was a really bullish development. We've got a major bear squeeze going on right now. Look at that huge volume. I mean, there's major volume behind the move. I mean, the bears are freaking trapped right now. You never know. It could dip, but right now it's pushing up above this high close horizontal resistance level. It needed to close above the closing price on June 18th. 370 was the key level to break. It did close above that level. Today it did hit the all-time high level, hitting that 387.46. I don't know what the exact all-time high, but that's pretty darn close, within pennies of the all-time high. And so it's going to need to break out above that level, the 387.50 level, in order to have what we call a blue sky breakout. There will be no overhead resistance above that level. It's never traded at those levels before. Okay, so you'll have to deal with the what you want to use is the intraday charts to find the resistance levels once it breaks out into blue sky territory, if that does in fact happen. Now tonight it did drop down to 376.62 in after hours trading, so it is a little bit below the close. And well, what you want to see it stay above 370. If it drops below 370, that's going to be a red flag, and you could see the candles work back into the bands. The chart's really bullish. It's just really pushing hard right now. You have EMA 4 way down here at 353, so you could have a drop all the way down to 353. It could bounce off of that level like it did right here on these two candles. When this white candle got above the upper Bollinger Band, the purple line, the candles worked their way back to EMA 4. It bounced off and then it headed higher. That could happen again, bounce off of it and then push to the next level, and the chart would still be extremely bullish. But really, in order for this to stay a really strong rally for the bulls, it needs to stay above 370. If you see it below 370, that could signal it's going to work its way into the back into the Bollinger Bands. Now take a look at the monthly chart. So this monthly chart is showing this upward channel the last several years. It's slowly working higher, making higher highs. The top of the channel right now is up here in this zone around, I would say it's around $400 or so. You can see this ascending resistance line. And so, you would be looking at when it gets to maybe that 420 level that he's talking about. If it does break out and run to that level, you're going to see likely profit taking, since this is a long multi-year resistance line. If it did break out above that level, that would be, then it could take it to the next level. But right now, that is the top of the channel. What it needs to happen is it needs to close above this closing price on the April 2017, this high close right here. If it can close above that closing price for the month, then that should signal that it's pushing higher. If it drops below and it fails to close above that level, then it'll still be in the sideways channel. It's been basically in a sideways channel on the monthly chart for the last several months, and so this could be the time where it finally breaks out above. As long as this green line is holding here, this is the 50-month moving average, currently at 261. This multi-year strong uptrend is intact. I mean, above 316 in that middle Bollinger Band signals the bulls are in control. So right now everybody's looking for a push higher. If you look here at the 15-minute chart for Tesla, you can see here it needed to break today above this closing price at 1 o'clock. It got above that level at 2 o'clock. That signaled more upside potential, and then it had the halt. and then boom, it broke out higher into the close. It hit that all-time high level where people took profits and they drove it back, but the chart closed it very strong. Even at 376, you're still above the upper Bollinger Band. So you're dealing with a super bullish 15-minute chart. As long as it doesn't break down, once again, look at 370. It's all about holding this pink line. The whole day today, all the candles were forming above that level. As long as it holds at 370.50 currently, 370.48, the chart is extremely bullish and the signals to keep riding. Once it drops below, that's when the share price could consolidate. Okay, take a look at Snap. All right, Snap reported at earnings tonight. This is an old chart. I wanted to show you this one because it's showing the gap. There's a gap on the chart from back here in May between low of day on this candle. This is the top of the gap, and then a high of day on this candle. This is the bottom of the gap, this green line. And so right now it's at 1320 and after hours trading. So it's pretty much flat. So it announced earnings and it pretty much went nowhere. It closed at 1312. It's at 1320. It's at what we call a flex point right now. If you can see here, there's this green line coming up. That's the 50-day simple moving average currently at 1301, and then the gold line coming down. That's the 100-day simple moving average at 1330. Look how today's real candle body formed right between those two levels. All right, so going forward, if it breaks above that 1330 level, that's going to signal upside potential. It hasn't closed above the 100-day simple moving average since back here in March, back before it dropped below and it got super nasty. If it closes above that, should be a bullish change in trend. Then it's going to have to get above the high close here on the 9th, and then the high close over here on the 18th. At $14. Those are going to be big levels to break. Notice how this zone right here is lined up with the top of the gap. The top of the gap is always a tough level to break, so it's going to have to bust through that. It has all the really major resistance all lined up above, but if it can get through this whole zone at the top, you've got the 300-day simple moving average at 1471. Now to the downside, if it drops below 13, that is going to signal downside risk. It needs to hold 13. Fail to hold 13, and you're looking at a drop down here 1230, testing the bottom, the previous support level and that lower Bollinger Band. Okay, take a look at Disney here. So Disney, had a big move today. This is hitting all-time highs. Disney is actually on a blue sky breakout. So this is big time, for Disney. They pushed it really hard into earnings. That can make it really tough. Because it's just priced for perfection. All the move happened before they announced earnings, and so once again you've got fairly flat. It's slightly down. It closed at 115.98, so basically 116. It's 50-60 cents down. Not big right now in after hours trading. What happened today? A doji formed, this candlestick. This is and it formed a bearish doji star reversal pattern. Anytime you have a gap up open with above, especially above the upper Bollinger Band, and a doji forms during an uptrend, that does signal the potential for a pullback. Dojis and hammers formed during an uptrend signal the chart could take a pause, could pull back. That's something to always think about. Also, when it's forming above that upper Bollinger Band, the big thing right now is just to hold this EMA4 at 115.25. As long as that's holding, the chart is super strong. If it did drop down there to EMA8 at 114 and held that level, that would be good. As you can see, these lower wicks had been bouncing off of the EMA 13. That's currently at 113. If it does take a dip, people are likely to load off these levels. If you can get a reload down here at 112, that would be the ideal entry point. You would want to try to load. You always want to shoot for that middle Bollinger Band if you can get it. The reason why I say that is because it's the bottom of the channel. The top of the channel is the upper Bollinger Band. The middle Bollinger Band is the bottom of the channel for uptrending stocks. And so you shoot for that level on a pullback if you can get it, because that's going to be the good low entry point if the uptrend continues. Okay, if you look here at the Disney monthly chart, you can see here it's breaking out above resistance. It needed to break above these two candles here. This is the all-time high close, and then the all-time high price. They're right next to each other back here in 2015, and this month it's breaking above those levels. So a monthly close above those levels should signal that it wants to break out higher. If it drops back in below this all-time high monthly close, then it's going to still be in this channel. It's been in a multi-year channel here on the monthly chart. As you can see, there is an ascending support line, so it is trying to break out. When you have an ascending type of triangle pattern here, and then you have a break above horizontal resistance. Usually that signals that the share price wants to head higher. Just have to look out for getting sucked back in here and forming another top at this key resistance zone. Okay, take a look at Match Group. Ticker symbol MTCH, closed up 1% today. Yeah, this is a big after hours move. I don't know how many people were on top of this beforehand, but congrats if you're a big winner tomorrow. This is currently at 44.30 and after hours trading. So that's a giant move. Notice how it did close above the middle Bollinger Band. That was your clue that this was heating up. It closed above the middle Bollinger Band, and that signaled that it was in play for a possible start of a new uptrend. As long as that level holds at 38.29, a new uptrend could begin. Right now, you're looking at a big gap up open. If it does indeed open up here at $44, what I'm looking at is this this high close from the 18th of June. I feel like it needs to stay above that level. If it dropped below, that's going to be your clue that it could pull back and consolidate. And the first big support level is going to be this 100-day simple moving average at 41.39. It needs to stay above that level. You know, you don't want to see it drop back below. As long as it stays above that 100-day simple moving average, it could keep pushing higher. Now, if it stayed above 44, that would be the most bullish scenario. And what you'd be looking for is a retrace back up to this 47 to 48 level. That's from the back here in April, and you've got a lot of trading at 47, and 48 was the high close there in April. Okay, so we'll keep an eye on Match Group tomorrow. Okay, take a look at AAOI, Applied Optoelectronics. All right, so these guys, this company did really well. Now this was the bonus type of play, because check out how it closed down 4.5%. All right, so you know you might get a little more bang for your buck on the call options tomorrow, because everybody was baking in downside risk heading into the close, and this is now going to be a big winner tomorrow. Currently trading at 45.50 in after hours trading, after being way down here at the 100 and 200-day simple moving averages at the close. It was at the bottom support level, and then now it's at the top. Okay, so what you have going on now is it's hitting the 400 and 300-day simple moving averages. They are converging here. Let's call it this 46.50 resistance zone. That's the level of the 400-day simple moving average. It's going to need to break above that level to head higher. If you see it struggling at 46.50, that could signal a temporary top. Notice how that is also lining up with the high close in June and resistance here in July. The high close is right here at 49. That's from the closing price here on the what is that, the 12th of July, and so that's going to be the really big level to break. If you see it break above this 46.50 and get into 47 zone, then keep an eye on $49. That's going to be the huge level to break from July. Okay, and you can see here that they had a earnings and revenue beat. Yeah, check them out for tomorrow. And then if you look at Papa John's here, okay, this is going to be the last stock in this video. You know, they have been getting pummeled, and it doesn't help when the CEO gets ousted, and then he's talking mad trash on earnings. You know, he's been talking mad trash about the company and the people running it for you know, ever since he's been ousted, and then tonight, you know, he was going off again tonight, so that did not help the share price at all. This is just getting pummeled. I know we've got some people in the chat with that have been writing puts, so congratulations. Way to stick with the trade. Right, so like you know, people had entered up here when it broke down, and then they've just been sticking with the trade. It's just been dropping lower, and if the candles keep staying below this pink line, EMA4 currently at 41.87, there's really no reason to cover the short position. It's the inverse of a bullish setup, of a very bullish chart. You know, when you have this type of pattern here with Disney on the monthly chart, this is very bullish. This is where you just stay long. You know what I mean? Why would you sell if it never closed below EMA4 if you were a long-term type of trader? And the same thing with the bearish chart like this. If you're going short, and this is more for short-term trading, but if it's staying below EMA4, you can keep riding the trade. You know, I know people got shook out down here because it was going back and forth, but today it closed down, and then now you're looking at a 36.75 after hours price. That's really pummeling the share price here. You know, what happens when it gets really down like this, now you look at 41, or you look at EMA4 currently at 41.87. That's the target on the once it finally bounces, and many times you'll see the share price work its way back up to that EMA4 level, fail to break, and then it keeps dropping lower. So always remember that on dead cat bounce type plays. EMA4 is the sell zone until resistance breaks. As you can see here, every time you sold at EMA4, if you were playing bounces and short-term trading, you were glad that you did. Okay, so if you look here at the weekly chart for pizza, you can see here this thing just broke below support. We were looking for a potential bounce off of this level here when I made this. This is an older chart. These annotations are old, and yeah, we were looking for a potential bounce off this level, and it broke below. And then the next key level was going to be this white candle right here, you know, this previous top, and so it was holding that level last week, and that was the low here from this candle back in 2016. We're looking at 2014 levels now, and now this week it's breaking below that level. All right, so it broke below, and then now you've got this huge move. So this is going to be a solid candle because this is a weekly candle, so this won't show the gap. This is just going to show a huge red candle all the way down here to $36, to $36.75, and what that's lining it up with is with this September of 2014 support. That's going to be the big level to hold. It needs to hold that level. If it fails to hold 36, that it could, you know, then you're looking at, I'm going to show you another chart, it could get even more ugly. And so, you know, 36 is a big level. It could possibly try to get a technical bounce off of that zone because that was big support back here in 2014. And if it does, then you'd be looking for it to work its way back up to that. You know, it's going to have, we'll talk about that later. You'll have to watch the next video. And then here we go here, pizza on the monthly chart. You can see here it's dropping below the 100-month moving average. It closed below that level last month, and so that was signaling downside risk, currently at 43.18, with 43 being resistance. Right now it's hitting this 37.50 zone, which is from down here in 2014 that we were talking about, but it's at 36.75, so it's below the monthly closing support zone. If it stays below 37.50 and closes below that for the month, that's going to be a major red flag. That's going to signal downside risk, and I think, you know, you could possibly see this head all the way down to that 200-month moving average at 26.76. I mean, I don't see what's going to stop it if things don't change soon and it doesn't hold support here, because as you can see here, this was all white candles just kind of walking it up. You know, there wasn't a lot of like sideways support there. So it could easily, if it busts through 37.50 and it turns into resistance, you could find it working its way eventually much lower. So yeah, I don't want to make any long-term calls or anything. We're going to take it one day at a time, but this is a key support level, so we're going to see if it can hold. Okay, thanks for viewing this video. Really appreciate it.